Hey guys, Whitney here. So glad to be back with you guys. It's been a couple weeks. I'm so thankful to my, I should say partner in crime at passiveinvesting.com, Taylor Koo, who stepped in for me last week while I was presenting at the Bigger Pockets conference and helped run a presentation on Myrtle Beach. And I'd be so interested to know if you guys have any cues about that, because we actually have a deal going on right now in Myrtle Beach, and we can talk more about that later. But if this is your first time joining today, welcome. I'm Whitney Elkins-Hutten. I am the Director of Investor Education here at passiveinvesting.com, and we do a weekly masterclass series to help you just learn all the ins and outs of passive investing, give you a chance to ask questions of us here in the team, but mostly just to boost your confidence before you go into your first or next deal with us here at passiveinvesting.com. Just in case you're not familiar, with how to kind of navigate the whole system, check out passiveinvestingwithwhitney.com. I've got some free goodies for you there, an ebook on passive investing, but also you can jump on my calendar. We can talk all things real estate, and you can see our open deals. But I am so excited to be joined here today with my other partner in crime, Mr. Andrew Davis, our Director of Investor Relations, and so much more. I feel like
the ever-expanding title.
Not the only thing he does here at passiveinvesting.com. So, guys, I am so excited. Andrew and I don't get to powwow enough virtually. We do get to see each other quite often at events, but to have him here is super exciting. And just to kind of, so you as the investors can actually meet him and see who's the man behind the scenes helping place your funds in various assets. And Andrew, why don't you just take a brief moment to, demystify, introduce yourself to the investors and also give them a little bit glimpse of your role here at passiveinvesting.com.
You bet. I'm more than happy to demystify myself. So I am Andrew Davis. I'm the Director of Investor Relations for passiveinvesting.com. I also head up our investor services department as well. So I really love what I do because I basically get to kind of steward the interaction from the point that somebody hears about our group and has that initial introductory call where they want to know what our track record is, who's running the show, what our strategy is, what our returns look like, all the way through to when they make a commitment, and then the whole, what we call the back end, the subscription documents, the accreditation process, which we're going to talk more about today, getting them set up in the portal, and then having those ongoing communications and relationships. And so our goal here at passiveinvesting.com is we want to build lifelong relationships with our investors. We want to be partnering with you 10, 20, 30 years down the road. And so I get to really kind of lead that process. I have an amazing team, Taylor Koo being one of my team members, an amazing investor relations team, and an amazing investor services team and support team. And so that's really what I do. I started with passiveinvesting.com almost 2 years ago now. And in that time, we have raised almost 450 million from individual investors, and by the end of this year we should be well over 500 million. And so I'm very privileged to do what I do. And then on a personal level, my wife Isabel and I live in beautiful Asheville, North Carolina, with our puppy Piper. And when I am not working, we'd love to travel and get out and hike, and you'll probably find us at one of the good breweries here, eating good food, or oftentimes being homebodies, holed up on our deck, reading a book or watching a movie or something. So that's a little bit about me.
Or even working while you're traveling, like your last out of the country adventure.
That's right. Yes. Last month I was in Scotland and Ireland, and well, it was a lot of fun. It was not a vacation. I was connected and synced up and dealing with a 5-hour time change, but very, very privileged to be able to work remotely when I so choose.
Awesome. All right, so let's dive in, because this is a topic that is not necessarily glamorous to talk about, right? We're not talking about returns or anything like restructures of PPMs or anything like that. We're talking about the accredited investor. And I really wanted to kind of dive in and out, like all the various nuances around what it means to be accredited, how that actually impacts the deal structure,
Yeah.
How can somebody find out if they are accredited? Because you and I both know we jump on phone calls with people all the time and they say, I don't think I'm accredited. And you
Mhm.
actually have a deeper conversation with them. You're like, yes, you are. So let's first start with the definition. What does it mean to be an accredited investor?
So an accredited investor, there's a, I guess we could start with sort of the philosophical answer to that question, which is there are certain deals, there are certain private, what are called private placements or private equity deals that are only open to accredited investors. And the idea behind that is that those investments are typically going to be, or always going to be, in what the kind of the investment world and the SEC would call alternatives. And so in their mind, or by their definition, those are inherently riskier deals. And so their philosophy is that somebody needs to have a certain level either of wealth, net worth or income, or direct experience in the space, a higher level of qualification in order to invest in one of those deals. And one of the reasons for that is generally when you're investing, say, in the S&P 500, you can invest $25 or $50 or something like that. And every single one of those companies is highly regulated. They have all sorts of reporting requirements that they have to adhere to. And the level of scrutiny from the SEC and the public is much, much higher. And so that, at least by the SEC's definition, makes those less risky or more traditional investments, whereas the investments that accredited investors can invest in are considered alternative. They're generally going to have higher minimums, $25, $50, $75, $100,000. And so for somebody to invest that amount of capital, basically what they want to see is either that they have a net worth or an income level that even if they lost every single dollar of that capital, they wouldn't be out on the streets. And that's really kind of what that the idea behind having that designation is. And then the two primary definitions that you'll find for an accredited investor is that one, it's an individual that has a net worth of $1 million that does not include any equity in their primary residence. So if you are house rich, that will not be counted towards that $1 million in net worth. They're looking at liquid assets, they're looking at real estate, they're looking at businesses, they're looking at all those things. But they're when I say real estate, investment real estate specifically, but they're not going to count the equity in your primary residence. And or you meet a $200,000 a year income threshold if you're filing as an individual or as a single person, or a $300,000 a year income threshold if you're filing as a married person.
Awesome. Now, those are the income and net worth tests.
Mm-hmm.
Now, you only have to meet one of them, right? You don't have to meet
Correct.
both.
And or.
Yep. And on the net worth, like it can be combined with a spouse too, mm-hmm. or a domestic partner, or spousal equivalent is what the SEC
spousal, isn't that romantic? This is my spousal equivalent.
But that is a recent change to the definition, because it opens up some doors for people, that might be in a domestic partnership or, mm-hmm. Something like that. Mm-hmm. Now, there are other ways that somebody can meet the SEC guidelines for accredited investors that are a little less known, that are more fill that checkbox for more of knowledge base. Mm-hmm. And what are those?
So they are, a little bit more nuanced, and these are recent additions to the definition. And so one of them is that you are a knowledgeable employee of a fund or of a private equity group, and you need to be at a director level or higher. And so basically the philosophy behind that is if you're working in the industry, if you're actually working for a sponsor like you and I do, then you have a higher level of knowledge or understanding of the space, and that knowledge lends you greater protection, or at least a greater awareness, right? So it's sort of a buyer beware. They deem you knowledgeable enough to make your own decisions and handle the risks associated. And then the other box that you can check, or kind of space that you can land in exclusive of income and net worth requirements, is you can be a registered investment advisor series and if you hold a Series 7, 65, and I want to say 82, but somebody will have to fact check me on that.
You got it.
Hey, I got it. Okay, so if you hold one of those series licenses, then you also can bypass those accredited investor requirements and invest in deals that are for accredited investors only.
Awesome.
Mhm.
All right. Now, does being an accredited investor mean that you actually have more knowledge than everybody else when it comes to investing?
I can definitively say that no, it does not. I've talked to a lot of accredited investors, many of whom are very knowledgeable, many of whom not so much. So no, that does not necessarily mean that you are more knowledgeable. It just means that you check one of 4 boxes. Somebody could win the lottery tomorrow and know nothing about investing, and they would all of a sudden be an accredited investor.
Yeah. So really that still goes back, even if you can check that accredited box, and you and I are both in agreement on this, and our philosophy as a company, we want people to be knowledgeable. We want know, love, and trust the operator, vet the market, vet the deal. Guys, we are going to be doing a lot of education around this in the next couple months. So you guys are coming in at a great time in this passive investing masterclass series. Now, now if it doesn't mean that somebody's actually more knowledgeable, why strive to be an accredited investor? Why strive to figure this out, get that little piece of paper that says, yes, I'm accredited?
Well, it's a really great question, and I think that one of the changes in the landscape over the last 10 or so years is basically the opening up of investment opportunities that were traditionally only available to the uber wealthy. And so historically, if you wanted to, say, buy an apartment community like the one that we're buying in Myrtle Beach right now, the Banks at Bridgewater, 252 units, $60+ million purchase price, it was going to be a real challenge unless you had a ton of money and you had a lot of friends that had a ton of money, and a few of you could pool together and buy that asset together. Because not only do you need to have the down payment, you need to have the net worth to qualify for the loan, and you need to have some sort of experience. And so basically kind of only the uber wealthy could get together and invest in the things in high quality scaled real estate. That is what has forever been a primary driver of wealth generation, accumulation, and generational wealth building. And so when you are an accredited investor, it just opens up a lot more of those types of investment opportunities for you. And I think, one of your passions, and one of mine as well, is financial freedom, and taking a holistic look at wealth, not just the accumulation of a certain net worth number, but what that actually affords you in your life. And there's a great deal of peace and freedom that comes from having your investments cover your living expenses. And I spent a lot of time reading and listening to podcasts, and kind of the prevailing, or one of the prevailing financial freedom philosophies is just investing in index funds. And you can assume a 7% year-over-year growth, and you've got a safe withdrawal rate of 3 to 4%. Well, you can do the math real quick. If you're kind of an average or even a high income earner, it's going to take you a long time to build up a portfolio that's going to let you have any kind of the lifestyle that you want, right? And so to give you a perspective, if you build up $1 million in your stock portfolio and you're looking at a 3 or 4% safe withdrawal rate that's going to allow you to maintain that level, that's $30,000 or $40,000 a year. With inflation, with cost of living, with families, whatever, most people can't live on that. They're going to spend a long time investing in the S&P 500 or index funds before they can hit that financial freedom number. Our typical deal, and most operators, syndicators that are putting together high quality multifamily or self-storage or car wash deals, our returns are 3 to 4x that, not even factoring in the tax benefits. And so if you think about that from if I need to get $5,000 a month or $10,000 a month of passive income, whatever your goal or target is, that can allow you to really accelerate that process. And so it's a really powerful thing as an investor with financial goals, but also lifestyle goals, to have access to these types of opportunities. You're on mute.
Why? Thank you. Yeah, my daughter popped in behind me and I was like, had to put myself on mute real fast. But yeah, on a lot of these opportunities too, if you're not an accredited investor, if you are seeking out deals that aren't accredited, you're not going to regularly see them because, if a deal, an operator is offering an accredited deal, they can advertise the deal. The operator can actually post the deals that are available on their website. Now that does not mean that they are better deals. It just means that you can actually have greater access to them, and see them, and you can actually figure out who those operators are. Now, so therefore bumping up your, increasing your deal flow that you can see. Now, is there any protections afforded in an accredited investor if they went in, worked with an operator that only worked with accredited investors or went into a deal that was only for accredited investors?
So it's a great question. I think one of the things that when you're coming in as a passive investor or in an LP GP structure, that's actually one of the beauties of being in that LP position is that you do have a lot of protections. Now, like any investment whatsoever, whether you're buying shares of Google or you're investing in a private placement, the old past performance is not indicative of future returns. And then kind of the max investing maximum, you should not invest what you're not prepared to lose. And so I would always say that, but as a limited partner in a GP-LP structure, generally you're going to be protected against any liabilities that result from the property, whether that's debts, any loans that are taken out on the property, any lawsuits that occur, et cetera. So you're actually very protected against issues that may arise in terms of individual liability on you.
Awesome. And then, one thing that I really like about deals that are all accredited is that there's a higher quality. You all are partners. You're partners with the general partner. You're partners with other limited partners, and so to actually, there's a higher quality of or caliber potentially of investor that's investing alongside you. So that can offer some protections as well.
Yeah,
and also that there's a third party taking a look at every single investor that went into the deal to say, yes, they are accredited.
Yeah, absolutely.
So let's talk about that really fast. There's two, I have two more questions and then we'll open up the floor, but how does one figure out if they are an accredited investor? And what, this is a two-part question. This is only, I got three. I lied. But is there ever a case that, you're talking to an investor and they're like, oh, I'm not accredited, but I hope to be so one day. And you actually uncover that they are. What, can you help lead us through this conversation? How can somebody actually figure out if they are or they aren't?
Yeah, you bet. So yes, I definitely had those conversations where I think some people just don't know what that means, or they think it means something different than it means. And so that more often is where people get hung up on that definition, is that I don't know what they think it means, but they think it means something different than it actually means. And so, generally I'll chat with somebody and listen, no, I'm not accredited. And I think they think it's some sort of license or some sort of plaque that you get in the mail or something like that, or like a black Amex when you hit some level of wealth. But so more often than not, it's really just doing doing an analysis of your net worth, which we should all do, right, as just good stewards of our money and as investors as well. So you can to do a quick evaluation of your assets and liabilities, and figure out if you check the net worth box, you should know how much money you make. If you don't, golly, I don't know. Are we going to cover that in the masterclass in the future? So knowing how much money you make would also assist you there. But then there's a handful of ways that you actually become verified as accredited. And so those are really, twofold. And if you're working with a sponsor, oftentimes a sponsor will assist you with this process. We assist all of our investors with this process. And the easiest way and the primary way that our investors utilize is through a third-party verification service. We use one called Parallel Markets, and they've been tremendous to work with. And basically what we do is when somebody goes through and they say, hey, I want to invest in the banks of Bridgewater, A part of the private placement memorandum process when they're filling out that document is them indicating to us how they would like to be verified, how they verified that they are an accredited investor. And they can say, I'd like to use a third-party service, or I'd like to submit verification from a financial professional, usually their CPA. Parallel markets is again very simple, and basically they'll ask either for some sort of income verification or some sort of net worth verification. They usually turn that verification around in 24 hours, and then that investor actually gets a copy of a certification from Parallel Markets saying, I'm an accredited investor, and they can use that certification to invest in that deal they're investing in with us, as well as any other deals that are 506C or Charlie deals that require accredited investors. Or they can take a template to their CPA. We have some templates that we share with our investors, and their CPA can say, yes, they check the box for income. Yes, they check the box for net worth, and then we'll accept that as well.
Awesome. And, you know, this is another change that recently came down. Once you go through that process, we can keep the letters on hand for 5 years.
That's
so,
right.
Yeah. But, you know, the letter has to be dated within, correct me if I'm wrong, 90 days of that initial investment. So we've talked about like the ins and outs, like, you know, what does it mean to be an accredited investor? You know, what are the different distinctions, you know, that people need to be aware of, you know, why, you know, it's beneficial for somebody to figure out if they are an accredited investor and invest with other in deals that are accredited. Now there's kind of like we already touched on it. Just because somebody can check that box as accredited doesn't actually make them an educated investor. So I would let's just like leave somebody with like a pearly little nugget on how they can actually protect themselves as they go into a deal. One of the things we talk about here is making sure to vet the operator, the market in the deal. Make sure you get on a call with an operator. I mean, we can spend like, you know, you and I together could spend like a couple hours on this, but like, is there any other things here that somebody should be like just high level checking the box to protect themselves as they go into a deal?
Yeah, it's a great question. So I think absolutely vetting the operator, and there's a lot. I mean, the internet is replete with, you know, reviews of sponsors, and there's investing groups that exist where a bunch of investors will pool together, and they'll talk about their experience with different sponsors. They'll talk about different metrics to look at. They'll talk about things to watch out for in the offering documents or in the underwriting. And so I think now could be the most beautiful time to be an investor, because there's so much great content out there, this class included, of course, on how to invest well. So I really think we have some investors that, and I talk about this a lot, right? Most of our investors, if you're an accredited investor, you're probably pretty busy. If you're making 200 to 300K a year, or you've amassed that kind of wealth, you've probably you're probably dedicated to another career. Many of our investors are doctors or lawyers or high earning entrepreneurs or serial entrepreneurs, and they're working 50, 60 plus hours a week, and then family and life obligations on top of that. And then sometimes we want to sleep. And so to me, it's really finding what I suggest to people, unless they're super passionate about investing and they love just staying up late at night reading PPMs and digging through underwriting, and those people are great. I'm one of those people. I don't stay up late at night reading PPMs, but I love reading about investing. But my suggestion is, find a group of like-minded people, either a local group or an online group, have a checklist for what you're looking for, and then find a few sponsors that you trust. You don't need to look at every single 506C deal or for accredited investors only deal that comes across. You'll never sleep. But find a few sponsors that you like and like and trust, that you're comfortable with their approach, that your risk tolerances are aligned, that are in it for the long term, and then invest with them. We have 2,000 plus investors in our deals. 70+% of those are repeat investors, and we have people tell us over and over again, "Hey, I just invest with you guys, or I invest with you guys and these 2 other sponsors, and that's it." And that's great. I think that's wise. That's wise and good, as long as you're doing your due diligence and you have a comfort level and a peace with that strategy and philosophy. So There's plenty of things somebody can do to protect themselves, but a lot of the protections in a 506c, well-structured 506c deal are already built in for the limited partner, for the passive investor. So as long as they do their due diligence on the sponsor, they should be pretty good.
Awesome. And guys, next week, we're going to be doing a town hall meeting.
That's right.
Andrew is going to be hosting that with our founders, Dan Handford, Danny Randazzo, Brandon Abbott. On the following week, Taylor and I will be doing kind of a quick and dirty high level overview on how to perform due diligence on a deal. So you guys stick around for that. Andrew, thank you so much for joining me today. Guys, don't go anywhere. We're going to open this up to those of us who are here live to an Ask Me Anything session. But as always, I am just so appreciative of any of you guys that have joined with us live, or are listening to this after the fact. You're taking your most precious resource, which is your time, not only to spend it with us here today, but to invest in yourself. Andrew, if somebody had additional questions, how can they get a hold of you?
I'm probably LinkedIn is the social platform I'm most active on. So you can ping me on LinkedIn. You can send me a note at andrew@passiveinvesting.com. I'd be happy to help.
Awesome. And if you guys are looking to check out our open deals, you can go to passiveinvestingwithwhitney.com. It's a subpage on the Passive Investing website. There you can get some free goodies that you can't get anywhere else on the website. You can get a hold of my calendar and see our open deals. We're going to start our after party.